So Vijay, I think let's start off with kind of the news of the day, the ETFs. Some people, I guess some Bitcoiners are kind of tired of it, but it really is a big deal. And we've seen today that Bitcoin sort of dropped below 40 on the back of a lot of sale pressure of GBTC. I wonder if you can just give us your thoughts on what's happening today and just as a general comment, the significance of the ETFs and where you see this going from a Bitcoin adoption perspective.
The ETFs being approved by the SEC is a huge historical moment for Bitcoin, and I think it's going to have a profound effect on Bitcoin's price level and development into the future. It really makes it quite a lot easier for people to get direct Bitcoin exposure. There are a lot of people out there who are just not technically savvy enough to understand. We can talk about hardware wallets and self-custody and all of that, which is actually fairly advanced for a lot of people. But even the level of going to Coinbase, going through, or any one of these exchanges, going through KYC, AML screening, and figuring out what an address is, what a wallet is, these are all very foreign concepts. Most people don't understand what this kind of stuff is. That it's not like people go through a KYC process on a regular basis where, the service that you're signing up for that you don't know is shady or not. If you're coming to this as a new person who doesn't know much about Bitcoin, it all seems very strange. Like, why do you want passport photos? What are you looking for here? Like, most people will go through something like this when they create a brokerage account, but they don't do this very frequently. They might do it once. They'll sign up with Fidelity or E-Trade or, one of those ones and then not think much about it. And so this kind of process is very unfamiliar. That and addresses and wallets and what are all these coins that are available? These are all very unfamiliar concepts. So what these ETFs allow is that people who don't want to go through that process, they can get exposure to Bitcoin very easily by just going to their regular brokerage account and buying an ETF just as easily as they would buy a normal stock like Microsoft or Google or another ETF like the Standard and Poor's Index ETF. So this is a kind of process that most people who are investors are quite familiar with. So what it does is it opens the door to a much wider set of investors who were never going to go through the process of going to a Bitcoin exchange and figuring out the details of wallets and addresses and that sort of thing. So it really broadens the audience of people who will be able to buy Bitcoin and who will buy Bitcoin. And one last comment about this, most people when they come to Bitcoin are not rabid Bitcoin enthusiasts. They've spoken to a few people, they're convinced there's something here, that it's an interesting technology, and it might make sense to allocate a small portion of their portfolio to this asset. But if you're going to allocate a small portion of your portfolio to this new asset, it really is a large hurdle to jump to sign up for an exchange and figure out how it works. If you're going to put in 1 or 2%, a lot of people get stuck at that spot and say, this isn't worth it. This hurdle is completely removed now. And it will have a big impact on Bitcoin's price, but it's also going to have a big impact on the ecosystem as well, if you think about it, because it is going to, a lot of volume is probably going to shift away from some of these exchanges and move on to sort of the traditional financial system where people get exposure to Bitcoin through a Fidelity or a Charles Schwab or a brokerage account.